Good afternoon. This is Charles Cochran of CNFT. I'd like to welcome you to our trade recap for the Emini, April the 24th, 2014. Every day we cover the major markets that we make specific trade recommendations on, and today we'll start off with the Emini and finish up with the Treasury note. We came into the market this morning wanting to sell failure to take out and hold the overnight session high at 81.50. The market in Z period after the early news hit on durable orders did go up, and it did pull stops above 81.50, but it couldn't hold it. And you can see right here Y through A before the day session of the E-mini opens is a B pattern, which suggests sell. Our first buy recommendation, and we did prefer the buy side in the morning, was 73 to 75, and we always like to execute better at our number 2 spots, and our second buy was 65 to 67. Big trading opportunities today. If you'd taken the trades as recommended, you'd have done well. You'd have been short at 81.50 off our trade setup, which I'll show you momentarily, and you could have covered in the 65, 67 area right down here, based on the rapidity of the fall in the E-mini. That just was nothing but selling off the opening of the day session. So how did the trade set up for us, and how did it look? We have specific trade setups that we utilize: retest failures, V-tops, V-bottoms, setback trades when the market is trending, and then exhaustion trades when there's been a major move and we think the market is bottoming or topping out. Early this morning we had the overnight session high at 81.50. The news, which hit, did take the market higher. We did go above the overnight session high at 81.50, and when you broke the bar that set the high for a V-top trade, you would have been short at 81.50 off of our prescribed trade setup. The market did sell. It found light buying at the value area low. That trade took you down to the 77 area. Just below 77, the market came back up, and then this is our setback trade, is denoted by the S. And in this particular situation, you would have been short in the 77.50 area. And when the day session opens, it's just straight down. You do not have an opportunity to get long at our 73.75 area. The market comes down, makes a low, minor retracement on profit taking, makes another low, and then right here off our V-bottom trade, you'd buy stop, and you'd be long at 66.50. This is what we call our mean green trade. So you'd have taken yourself out of that trade at 72.25. So 66.50 to 72.25 is a nice trade. And these are the first 2 or 3 trades of the day, and you had upwards of, on the sell side, you had a shot at 15 to 16 points. On the buy side, 5 to 6 points, depending on your entry. That's not a bad way to start the day. So this morning, we wanted to sell failure to take out the highs. That trade set up nicely for us. Our number 2 buy zone, which is where we like to execute, got us long in the 65, 67 area. We caught both edges of the market, so we had a successful day of trading. If you'd like to learn more about our trading methodology, how we uncover or ferret out these trades, what our setups are, how we enter, manage, and exit trades, please call CNFT Futures, and we'll have somebody contact you and go over our trade recommendations, trade setups with you. Looking forward to seeing some of you in the room in the not-so-distant future.